Hi folks, Lee Gettess here with the market sense for the week of December 9th, 2014. We are going to look at some charts from the Trade Navigator software, and the first chart is a weekly bond market chart here, and I gotta say this is a bit of a surprise to me. After breaking down last week, I thought this might be good enough to be the retest of this old high back here that we were looking for. But instead of going down to the 140.04 support that we thought was pretty likely for this week, they've held this middle moving average is 141.10. They did poke through that a bit, but they recovered it quickly, and you can see they haven't stopped anywhere. They've taken out the highs of the last, what is that, 6 weeks, 7 weeks, 8 weeks, and gosh, I don't know where they're going. Clearly they're going higher. It looks a bit like too much. I think it's a reaction to a breakdown in European markets as well as the U.S. market, and I'm not sure that that's going to last a long time. So it may be short-lived, but there's nothing up here to sell against. I mean, they've gone above everything so far, and they're probably going to turn from nothing, and then we'll have to try and figure out where they go from there. But right now, there's nothing to do but watch and see how high they can go. Stocks, also an interesting situation. After being so strong last week, they could have held as high as 2075. That's up here, the upper moving average. They didn't. They could have held 2063 in the middle moving average. They didn't. They could have held 2045 here at the lower moving average, and they didn't. They broke below all of that kind of stuff and looked like, boy, this could get nasty, right? Well, except they recovered Tuesday. They started coming back up, and I still think they're probably going to new highs. I think we're probably going to see new highs before the year is out, but they've kind of already swallowed everything that could have been the weekly range here. I want to show you another chart. I'm a relatively short-term trader, but I want to show you another chart just to show when they broke down here. Let's go look at a monthly chart. And you can see this is, of course, just an incredible uptrend, especially since late 2011. And you can see this upper moving average, which is where a strong trending market will hold. That upper moving average right there, the upper red line, is 2035. They went to 2033 and a half. Boy, still looks like they're trending strongly, doesn't it? I mean, it just still looks like they could go higher for the year. When I say for the year, obviously they're higher for the year. I mean, I still expect to see them at new highs before the year's out and possibly challenging the 2100 area. Awfully difficult because of the speed of this move up. It's awfully difficult to determine where a low might come in when they do back off, but as you can see, this upper moving average on the monthly may be what stopped them here. And if that's the case, that means the monthly chart is still trending up strongly. So yeah, a rocket ship could still go anywhere. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.